I think it trivially gets to 250,000. I think 1 million is possible within the next 18 months. I just don't think people have a big enough imagination for this upcoming cycle and what's going on. And I think we're entering the last chapter of this macroeconomic system of sorts. Really, this is post-World War II.
Welcome back to our channel. Today, we have an insightful discussion from Jack Mallers. Jack Mallers begins by several ongoing currency crises, such as those in Nigeria, Turkey, and now Japan. He predicts that China will soon have to devalue its currency. This string of crises indicates a broader instability within the global financial system. Despite these challenges, Mallers does not foresee the United States defaulting or its major financial institutions collapsing. Instead, he predicts that politicians will opt to inflate the economy to manage deficits, avoiding direct economic pain for citizens. Given the economic backdrop, Mallers is optimistic about Bitcoin's price, forecasting a range between $250,000 and $1 million within the next 18 months. This wide range reflects the unpredictable nature of pricing an asset that operates independently of traditional financial systems. He emphasizes that Bitcoin's value will likely soar due to the debasement of traditional currencies as governments attempt to maintain economic stability. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I just don't think people have a big enough imagination for this upcoming cycle and what's going on. And I think we're entering the last chapter of this macroeconomic system of sorts. Really, this is post-World War II. And you have this American hegemony that I'm American, that we have been trying to protect and persist for a long time. And I think we're seeing potentially the final ends of that. I mean, let's look at now there's a dollar yen, there's a swap line with Japan that we just opened, right? I mean, we've seen currency crises in Nigeria and in Turkey. Now we're seeing one in Japan. Soon China's going to have to devalue. And so my simple math and logic is, again, like there's a loss that has to be realized. Do I think that the United States of America is going to default and have JP Morgan and all of their financial institutions and banking underbelly collapse? We're seeing what that looks like in Argentina, by the way. It's not easy. I don't think any politician I don't think Trump or Biden or RFK is going to get up and say, I'm going to take away your health care. I'm going to inflate everything around you. I'm going to crash everything you know. All your bank deposits are gone. We're going to go through the Great Depression because it's in the best interest of America. That's not what politicians do, right? I think politicians are going to say, here's a bunch of free shit, and this is why you should elect me. And they're going to have to fill the hole of this deficit. And that, I think it's not impossible to think. I'm quoted saying 250,000 to 1 million. That's my range. And the range is wide, but you're asking me to price something in a piece of paper that politicians, as you pointed out, that don't even know how the system works, are actively debasing. So, I think it trivially gets to 250,000. I think 1 million is possible within the next 18 months for that reason. I mean, even what's happening right now in Japan is terrifying. They're literally testing a swap line to protect the Japanese currency. The Japanese currency is getting so weak, China's going to have to devalue soon, probably. So I think 1 million is reasonable. I mean, given the amount of debasing that they're going to have to do to hold the system up and bail out the bond market. I think gold, unfortunately, and we can get into the Bitcoin gold debate, but I think gold concentrates, which is just an unfortunate property of the metal itself. Bitcoin doesn't. In fact, there's an all-time low of physical Bitcoin on exchanges today, which implies that they're being custodied by the individuals. Like the fact that I can put a physical Bitcoin in my brain is a technological innovation. I can't put a gold bar in my brain. Would I put it through my ear or through my mouth, right? And so I don't think that the risk of Bitcoin concentrating is near what it was with gold. I also think because Satoshi released it on a mailing list and walked away is the fact that it's so well distributed already through the people. If Satoshi took it to Goldman Sachs and listed it on a public exchange, I think that it would be concentrated, but Satoshi did not do that. And so I think it's nearly impossible for someone like BlackRock or someone like Michael Saylor to achieve a position that's big enough to concentrate Bitcoin. So I don't see it as a risk in that standpoint. I do see it as a risk in that it's still a financial instrument that's within the existing old school financial system, right? You don't actually own Bitcoin. You own Larry Fink's security that represents Bitcoin. And so I think those are two entirely different assets, and you're sacrificing a lot of the benefit of owning Bitcoin for the convenience of the ETF. So that I think there's risk for those that are opting to own an ETF as opposed to the physical Bitcoin, but maybe they've evaluated those trade-offs and those trade-offs are beneficial for them. But on net, I think it's a phenomenal thing for the industry because Bitcoin's this permissionless system. Everyone has a right to do whatever they want with it. The rules are set in stone. No one can change them, and they are what they are. And so people can do whatever they want. And I think it's great that banks and Wall Street are on the same team as me. It's very telling as to where the global macro environment is right now. I think right now we're in this really weird environment where we've had rates that were raised faster than they've ever been raised before, and they've persisted. And now we have this Fed that's trying to scare markets and claim higher for longer, where in reality, I don't think it actually matters. It's clearly inflationary, whether you're looking at the stock market, gold, the real estate index, Bitcoin, everything is double digit year over year returns. And so it's clearly stimulative still. It's clearly inflationary still. I think people can get confused by the price of money, which is interest rates. But what about the supply of money? They're still stimulating. They're still printing dollars. And so I actually don't think it matters what the Fed does. It's all stimulative. And the reality is my favorite metric is global debt to GDP, because it really, to me, it just tells the story very cleanly, is that I view money as our time and energy in an abstracted form, our time and energy in a market good that we can either save or exchange. And so what global debt to GDP tells me is that governments around the world have borrowed a tremendous amount of our time and energy from our future with no growth to pay it back. That loss has to be realized somewhere. Okay, so where's that loss going to be realized? They have two options. Either the people that lent them the time and energy or the money aren't going to get it back. And those are who? The bondholders. Those are all of the banks, all of the wealth in the world. Or they're going to debase the currency of the general populace and take time and energy from them. And that's what we call inflation. So to me, it doesn't really matter what the Fed does, higher for longer, we're going to cut. It's all a load of nonsense. It's all very distracting. It's that there's a loss that has to be realized somewhere. And it's either going to be all the banks have to collapse and the bond market and the sovereign debt market's going to go to zero, or they're going to debase the currency and inflate their way out, which is just ways of abstracting time and energy away from the populace to make themselves whole on what has been an egregious mistake in government and in fiat currency.
Mahler's comments on the current economic environment, characterized by rapidly rising interest rates. Despite the Federal Reserve's attempts to control inflation, he believes the ongoing economic stimulus is inherently inflationary. He uses global debt to GDP ratios to illustrate how governments have borrowed against future productivity without corresponding growth, necessitating either defaults or currency debasement to balance the scales. According to Mahler's, he likens financial volatility to natural life entropy, suggesting that progress inherently involves fluctuation. Financially, he advises maintaining a low time preference and living within one's means. This approach ensures sustainability and aligns with the principles he learned from Bitcoin, emphasizing the value of conserving resources for future stability.
Volatility is life. Volatility is a good thing. So first of all, if you were to walk into a building and I were to tell you, you have to get to the top floor, but with no volatility, how are you going to go up? You're going to be stuck in the lobby for the rest of your life. And so the idea that we've all been convinced that volatility is bad is the same idea that no one's educated on purchasing power. Volatility is human. Entropy is constant in our world. And so volatility is normal, volatility is expected, and volatility is progress. So I encourage and invite volatility. As far as how do I financially deal with it, I think you have a low time preference and you live within your means. Like I said, if you don't consume more from the world than you give to it, which is another way of living your life profitably, right? Like Strike is a profitable business. We give more to the world than we consume from it. That's how I think about it.
I like that. Yeah.
As a human, give more to the world than you consume from it. That way you can accrue and save. And it's very simple from there. I think Bitcoin taught me that more than anyone else or any other experience, to be totally honest with you, because when you do understand the concept of time and energy and contributions to society, then a fancy car isn't ever worth the Bitcoin that I've worked to acquire. And so I only trade and exchange my Bitcoin for experiences for people I love, to be honest. I mean, how beautiful is it? How beautiful of an idea, I guess, is it that, we can make the world a better place for the people that we care about the most. And so Bitcoin taught me that. It really lowered my time preference and taught me the value of things. I think it's really impossible to value things if there's an infinite amount of dollars. I like to draw this similarity to the promise of death. This is going to get potentially a little weird or dark, but it's the promise of
death. Invite that. I invite that.
It's the promise of death that allows us to value our life. If I was never going to die and I knew that, then I'd go to the gym in 1,000 years. I'd think to get married in 10,000 years. I would never care to value today. And that's very similar to the dollar. If there's infinite amounts of dollars and we're going to roll this debt over forever, then how do I value my paycheck right now? And so I think what death means to life, Bitcoin means to money and to value. And so Bitcoin gave me that finite promise that allows me to value the time and energy that I spend right now. And it's not worth expending a tremendous amount of my time and energy on a yellow car that goes really fast. In the same way that knowing that I'm going to die, it's not worth ever wasting a day, a week, a year.
Bitcoin has profoundly influenced Mahler's personal values, teaching him to prioritize long-term wealth preservation over short-term luxuries. This shift in perspective has led him to value experiences and relationships more than material possessions. Bitcoin's finite nature, much like the inevitability of death, gives meaning to current efforts and expenditures. Mahler concludes by drawing a philosophical parallel between Bitcoin and life. Just as the finite nature of life imparts value to our actions, Bitcoin's limited supply confers value to the money we earn and save. This perspective underscores the importance of valuing time and energy in the present, enhancing both financial and personal well-being. Please like and subscribe my channel.